topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good afternoon, California, New Mexico, Arizona. We have some of the greatest states watching us today. This is a great show. I got to say, before we get started, we've been doing this show for probably close to a year now. And I got to tell you, I looked at my numbers on YouTube and I was blown away. Most of our listeners are on W4CY Radio and iHeart and Spotify, but I looked at our YouTube numbers and just amazing. We want to thank you for tuning in. This is our 16th year of Ask the Experts, and you have all asked for a show like this. And I got to tell you, I am shocked. We got 3 calls the other day from Arizona when they saw the show was going to be on, one from New Mexico. And of course, we're getting tons of emails from California, the great state of California. Well, we found one of the top public insurance adjusters, and the name of the company is Crown Adjusting. And we're so lucky because not only do we have one of the partners, we have both of them. We have Robert Crown and Joseph Fernandez. Hey, good afternoon, guys.
Good afternoon, Stephen.
Good afternoon, Stephen.
I got to tell you, your new numbers are off the wall. Robert, let's start off with you. Tell people about your background and how you started Crown Adjusting.
Well, I've been in the industry since 1985. I started with a firm based out of LA. They opened up an office up here, and I was an apprentice with that company for quite a long time. Then I went to work on a smaller scale with a smaller company for another 15 years, and in 2014 decided that it was time to hang out my own shingle. I've been working, I guess we're the boutique alternative to the 800-pound gorilla. Joseph and I have been working together. It feels like much, much longer, but we've been working together for the last 3.5 years, and formally since January of this year.
And Joseph, tell people about your background?
So I started off, first, my family, my father specifically, has had his own design and build general contractor company out in the Silicon Valley for about 40 years now. And throughout the years of him owning and operating that, which he still does today, I worked with him kind of on and off during the summers and whatnot during, when school was off season and whatnot. So I gained a lot of valuable experience working with him. That being said, my career transitioned more into corporate style and, where I became an engineer, worked for several, Fortune 500 companies in the medical space. And then I started to get interest in the insurance industry back when a lot of the hurricanes were kind of hitting. And I had a family friend who was in the public adjusting industry. And I started to kind of venture into that a little bit. Did a couple of they call them catastrophe deployments, where I went out to several hurricanes, wrote estimates on behalf of the insurance company, thinking that I was doing the noble work of helping people. Come to find out that a lot of the estimates that I wrote were essentially being manipulated. They were being manipulated in favor of the insurance company. And the reason I knew that is because I'd get phone calls from these poor policyholders saying, hey, I thought we had agreed on the numbers, or more specifically, the scope that we discussed. And I said, listen, I have no control. The person above me decided to make certain alterations and take liberties. And, pretty much that catapulted me into understanding that, working even as a contractor of the insurance company, you really don't have the say or the power to affect positive change. So then that's when I decided that I wanted to become a public adjuster, and realizing that I could make better change and help the consumer, more impactfully than I was doing it as a independent adjuster. So I found Robert, and we've been working together ever since, and we've been helping impact the lives of consumers and policyholders for a while now. So.
Well, listen, I'm just glad we have both of you. What's going on in California? I mean, we always kind of do an update every month with the fires. Anything happening there, or people getting the certificates they need?
Well, if you're asking a question about people piloting through the monumental undertaking of documenting their losses and being poised to make decisions that are huge financial decisions about rebuilding, they're right in the middle of that. And some folks are finding their way to us a little later in the game, or at this stage, because they are unhappy, and they were not persuaded to hire a public adjuster earlier. And maybe that was for good reasons, since we can only help so many people, and some people are underinsured to begin with. So when we get involved in a claim at this late in the game, we're working on, if it's a good fit, we're working on a percentage of new money, not the money they've already received.
Well, Joseph, let's start off, because I can't believe all the people who still don't know what a public adjuster does. Tell people what an adjuster does.
Yeah, I mean, a lot of people find their way to us by unfortunate circumstance. Most of the time, they find their way to us when they feel like they have no recourse. They don't want to immediately go to an attorney. And so people find, well, who else can I engage? And then a lot of time, through their own, internet search, public adjuster will come up. So what they find out when they do their research and find out what a public adjuster does, what their involvement is, and what the difference is between them and attorney, they're like, wow, so a public adjuster is someone who is specialized in acting as an advocate on behalf of the insured, so that we can adjust the claim properly and settle it based on the extent of damages that have occurred. And so why people end up wanting to use us is because, number one, they find out that we're a specialized niche in the industry. And, we're there to act as their advocate, which means we have a lot of skin in the game to get them as much money as possible, because the more that we recover for them, the better it is for us, as well, as we'll find out later on how we're compensated. So we're essentially an advocate for the consumer, the policyholder, to essentially adjust the insurance claim on their behalf to make sure that the insurance company provides what's fair for an insurance settlement.
Robert, walk us through. We have never done this before, and you don't have to use any names or anything, but walk us through when a person contacts you about a claim and all the procedures you do, because I've had a couple of people write us to go, I still don't understand what a public adjuster does. So if you take one of your, I guess, something that's happened in the last year and walk us through without using any names, that might give people even a better idea.
Okay, that's you could break that down into its component parts. It's not easy to understand what a public adjuster does. It's not easy to understand how they earn their fee, but people come to us because they are having a lot of difficulty navigating the claim, or in many cases for public adjusters that have professional sales reps running around, they would meet someone after a loss, and if they weren't really upset by what they've just been through, they would want to find out, can a public adjuster really help them? So, someone that comes to us, and people are finding us now more than ever, we have a vignette of questions that, or a host of questions we ask them to answer, and it's like a questionnaire that sort of gets them in our door. And then we have to really understand much more about where they're at in the process. Someone that might be recommended to us who had a kitchen fire will, say, I don't know what you do, but I think I need your help. And so we will make our introduction, and if we're not terribly busy, we will make an appointment to look at their particular damage and get a general idea of what the variables are in their claims, so we can make an informed decision about how to talk to them about what they're about to go through. So if it's a fire to a house and everything's gone, like as is the case in LA, then those people are going to need a public adjuster to help quarterback the claim, both in terms of understanding the policy coverage and doing what the insurance company expects the consumer to do to document their own loss, which, of course, if you've never been through this before, that's the whole reason for learning about what a public adjuster does anyway, because they're either doing it for themselves, struggling to find their way through it and understand what the requirements are, or they're not trying to reinvent the wheel because there's a profession that does this on the consumer's behalf.
Do you find that a lot of people tried to do it themselves in the beginning?
Yes. Yeah, definitely. I mean, it's, I think most of us in general try something, at least in the very beginning, to gauge just how difficult it might be. And then when we find ourselves in a place where we're out of our league and feeling like we're not making much progress, we then tend to think, well, maybe I should look for outside help because I'm not getting anywhere. I'm not getting a response. It's been 5 weeks and I have yet to hear from anyone, or I received an estimate and they're telling me that this is all they're going to pay. So I think most times people feel like this is something to no fault of their own that they can handle because, well, I have insurance. I've had a good relationship with this insurance company. They should treat me fairly, right? So I really shouldn't need the help. And then, truth be told, they go through the process and they find that this is not really an easy process and it's really not designed that way. And people either start to feel scared or worried that if they continue down this road, they're going to end up with insufficient funds, or they're going to, they're going to destroy the opportunity they have to get everything that's necessary. So then that's when they run into troubles, when they start to realize that maybe they need to consult with professionals such as us.
So, I asked that question because that's what I did about 15 years ago. I tried to actually handle it myself. I did not even know what a public adjuster was. And a friend of mine said, "Why are you doing this yourself? You know nothing." I had a flood. And I've hired a public adjuster, and I got to tell you, now I know every case is different, but mine, I got about $85,000 more than I could have gotten myself. And I probably might have gotten more because I screwed it up for myself, not knowing what to say and what not to say. So I
Hey,
think what you guys do is so important.
I don't think we were around then, but you should have hired us.
But
I'm kidding.
that's why I
I'm
think
kidding, of
they.
course.
No, I know. But I'm just telling people I was that idiot that tried to do it myself. And you guys are the pros. And there were so many things I didn't know. Even matching tile, something small like that made such a huge difference. So, I'm a big advocate of you guys, and that's why we're doing this show, because people need to know not to handle this themselves when there's pros out there like you two.
Yeah, not to mention, I mean, a lot of people that end up getting our help are people that frankly don't have the time to deal with it, because
Mm.
it can very quickly become a full-time job, speaking and interfacing with multiple people, taking meetings with people, vendors, testing companies, you name it. It all depends. It's obviously different depending on the severity of your claim. The larger your claim, the more as Robert says, the cast of characters are in full effect. You get multiple people involved, and it just eats up hours and hours of your time. So you're better off allowing a professional to dedicate his time to doing and meeting with these people, because at the end of the day, you're going to get a better result, and you're going to save yourself a ton of time, aggravation, and you're going to get a better result than you would otherwise doing it yourself.
While you're talking about that, Joseph, a lot of people don't even understand their policy. They have no idea what their policy says. Can you talk a little bit about reading a policy and maybe some basic coverages and deductibles?
Sure. Yeah. I mean, it's everything. 80% of what you're going to need to know in your policy can be found on the declarations page. Sometimes they call it the DEX page, which is short for declarations, DECS, DEX page. And for most of us, we have what's called a homeowner's policy, which is an HO3 policy, and it's broken down into a couple different letters of coverage. So you have your coverage A as an apple. Your coverage A is your dwelling. So that's your main structure. That's your house. Okay. If you have an attached garage, that's also part of your dwelling. So anything inside of that home, like your roof, your floors, your cabinets, your countertops, drywall, that's all considered coverage A dwelling. Pretty much what I like to say, if you were to take your house and flip it upside down, anything that doesn't, shake out, that stays attached to the house is your dwelling, essentially.
That makes sense.
That's a good way to picture it, right?
Yeah, absolutely.
So then your coverage B, as in boy, is other structures. In most cases, there are certain insurance companies that group those together, but most other insurance companies, your coverage B as in boy is other structures. Other structures are things like detached fence, detached decking, pergola, sheds, Detached garage. Some people have detached garages. Those are other structures. It's still something that could be bolted down to a slab, but it's not part of your main dwelling. That's in other structures. Your C, as in Charlie, that's typically your personal property. So those are all your contents inside your house. So again, going back to the example of, you take your home and you turn your home upside down, and everything you shake that comes out, that's all personal property. So all your contents, all your clothing, your bed frame, mattresses, books, electronics, all those things are your personal property. And then the final one is coverage D, as in David. That's loss of use. Most of us have loss of use, which means if you have to relocate out of your property and live somewhere temporarily, that loss of use pays the housing expense for that temporary housing. It also will pay the difference in utility costs. I'll give you an example. Let's say the home that you own has solar. So you pay very little in electricity because your solar panels are there and in your actual home, let's say. You go to a temporary home and now you're paying double, if not triple, in electrical. So your previous expense, let's say, was $100 because you had solar. And now you're paying $500. So the difference in that is what also gets paid out of the loss of use ALE expense, which is your coverage D bucket. So people need to understand that. And another thing that people don't understand too is they think, oh, I can use this expense, or this bucket of money in coverage, to cover the amount of times that I go out to eat at a restaurant. And the truth of the matter is, if you no longer have access to your kitchen as a result of a fire or a flood or what have you, the insurance company is going to look at what you normally spend to eat out. And if that's $200 a month you normally spend on a normal month, and now you're spending $500 because you don't longer have the use of your kitchen, they're going to give you that $300. Actually, they're not going to give you the full $500. They're going to give you the difference. That's what they pay you. That's important to note that. So that's your basic coverages, A, B, C, and D. And then the last but not least, usually this is part of coverage A, it's called code upgrade. So anytime you have something that doesn't comply with the building standards of your municipality, code upgrade is there to bring it up to code. And they will not generally pay your code upgrade, which is usually 10% of coverage A. So if your coverage A is $500,000, your code allocated is $50,000. So, and they won't pay that typically until you spend the money first, show proof that you've spent it.
Can I weigh in here? Just add a few things.
Please.
So the code upgrade coverage is typically an additional amount of insurance over and above the limit. But there are some code coverages that are included in the dollar limit. So you have to discern whether it's extra or if it's part of the coverage A amount. Certainly having it as an extra amount provides another layer of protection. But the important thing that Joseph covered very skillfully is that they don't pay you that money unless you can prove to the insurance company that those are requirements to meet current civil code and ordinance in order to get the house rebuilt. And they withhold that money and reserve the right to scrutinize it, because if you don't spend it, if you don't actually spend it, they're not going to pay it to you. So that has to be part of the measure of damages. And we will frequently try to include code in our claim presentation, but it has to be accompanied by a set of correction notices or something from the building department where they literally lay it out.
Robert, listen, can we talk about lowball estimates, contractors versus carrier estimates?
That's a good question. Sure. The if you looked at the loss settlement provisions, and Joseph and I can go back and forth. If you look at the loss settlement provisions, it kind of explains what the insurance company is obligated to pay, subject to an agreement between you and the insurance company. But they're never going to pay more than the lesser of the following amounts: the amount necessary to repair and replace the building or buildings that were destroyed, or nothing more than the policy limit. And if the measure of repair is less than the limit, they're going to pay that number. So typically when an insurance company gets involved, they may bring in an adjuster who's not even a qualified contractor to utilize their software to come up with a preliminary number. That's probably the first inkling that a client is going to need to go find someone to help them, because they realize after talking to other people that the amount of money the insurance company came up with is nowhere near enough. That is oftentimes referred to as lowballing. But even when they bring in an insurance repair estimator or a contractor, they get on the insurance company's list for a couple reasons. Because they do come in with competitively priced estimates, and in a way they become, whether they like it or not, from the policyholder's perspective, they become a captive agent. The first question by the homeowner is, well, you're bidding my repair for the insurance company. I don't know that that's correct. And can you be wearing two hats when you're also courting me for the business? The insurance company's not going to approve a number if it's too high. And so the policyholder will frequently worry about whether or not they're leaving money on the table, or whether they're even comfortable with using a contractor that's brought out by an insurance company. We know our clients have the right to use anyone, including a contractor that the insurance company brings out. But we want to make sure that what they come up with is more than sufficient to cover them for the full cost of repairs.
Joseph, can we talk about delay tactics? Requests for documents, slow payments. I'm sure you go through that all the time.
Yeah, oh, definitely. It's the delay tactics are intentional. I know people sometimes, a lot of clients that end up hiring us, we kind of start to hear the horror stories of what they've been through, and they almost tell it to us as a way of validating, like, am I crazy for some of the things that they're doing, and it seems like they're doing this intentionally, but I'm not sure, and this and that, and not really getting back to me. And what we tell them is, absolutely, what you're describing is something that most everyone goes through. And when you start to see these patterns of delays, you start to wonder, is this really systemically part of the process that the insurance engages in to just wear you out? And the answer is yes. Unfortunately, it is. And it's a tactic that's used all too often. And what we do to fight against that is, we hold them accountable. We hold them accountable based on the, California insurance regulations, which requires, certain amount of accountability from these insurance companies. One of them specifically is, and I'll give this tip to everyone listening here, it's anytime that you reach out to an insurance adjuster, whether that's a phone call, email, they are obligated to get back in contact with you or respond to your message within 15 days. If they don't respond within 15 days, and this is California specifically, I might add. So for anyone outside of California, you might have to do a search on your insurance regulations for your local state. But for California specifically, it's 15 days. And I often have to remind the adjusters that I'm involved with that, hey, it's been over 15 days. What's going on? I haven't heard from you. I don't have an update. You know, the least that these insurance adjusters can do is say, you know, I just want to let you know we're still working on this. We received your email. We have your estimate. And, you know, you'll hear back from us, you know, here shortly. And I think that's the minimum that we all ask for is an update. So delays, those things, it's part of it. But what do you do to combat it is what we specialize in. So I just gave you that tip. And other things that happened are they like to send out their own contractor. As Robert already kind of mentioned this, is insurance companies will send out approved contractors from their program. These are vetted contractors that essentially subscribe to their program, where they essentially have to understand how things work in terms of, if I send you out here, you're going to be putting an estimate together. You're going to be answering to us, because they don't want the insurance contractor to bid a job in favor of a high payout. And so these contractors that are part of this program get sent out. They put an estimate together. That estimate does not get sent to me. It's sent to the insurance company first. And so what sometimes happens is this insurance contractor will get the estimate done that week. And what happens? The insurance company sits on it and sits on it and sits on it and sits on it. Meanwhile, while they're sitting on it, the price of that estimate is going down. It's going down. They keep sending it back to the insurance contractor, say, hey, remove this, change this. We're not approving that. And the insurance contractor is like, well, you sent me out here. I'm writing an estimate. What gives? But hey, you want to be part of our program? You want to remain in our program? Get with it, or you're going to get out. Okay.
Wow.
And that happens.
Yeah,
Unbelievable.
It's worth noting that the gamesmanship associated with this, the way they do this, is that they come back with their preliminary number, and the policyholders naturally concerned, but they'll say to the consumer, oh, by the way, this is just our initial calculation, and we will revise it accordingly if there are things that are missing, or you get an estimate for more as a separate matter. That's presuming the policyholders already distrusting of the process, and they are, and they should be. Not because the insurance companies, we could tell you horror stories where we would be the first to say, yeah, the insurance companies frequently are out to hurt the consumer. I'm watching my language, by the way. But it doesn't mean, though, that in every case their first number is god awful. More oftentimes than not, the policyholder, the homeowner, if they have no experience in understanding policy language or even understanding the nature of the construction, they're hurting themselves, because how do they know what's missing from a number that is just, a number? The number is only worth the paper it's printed on, and sometimes it's not even worth that. So, people will find us because they suspect that there are things that have been done incorrectly, and they want a second opinion. I think many folks who have come to us have, their only regret is they didn't hire us earlier. But we evaluate everything on its own merits, and sometimes we say no to people that might need our help because there's too many mistakes that have been made, and it's like that the process is going to be so delayed that through no fault of our own, and certainly I don't remind people about the mistakes they made. There's nothing you can do about it, but I let them know that it's a problem, and so that they are looking at the kind of help they need, or the kind of help we think we can offer. They got to look at it realistically.
Joseph, we do a real successful show in California on mold and mildew removal. talk about mold and code upgrade coverage. And are there a lot of common denial areas when it comes to mold?
Yeah, mold in the industry, I mean, we call mold the M word because it's a bad word. It's a bad word because most insurance companies shy away from having any coverage on mold. And the reason that is because mold is as a result of water damage that does not get addressed. And so there are instances where homeowners are, let's just say, not responsible, and they don't take the responsibility of drying their home out right away after water loss occurs. And then shortly after, mold starts growing. And then when it gets to that point, the insurance company starts to get a bit skittish on covering it for the reason that it can get really nasty. And mold, you can have a much larger mold claim than an initial water claim. You can have a $10,000 water damage claim. And then due to the mold just getting worse and growing, that can turn into not double, triple damage. And so you can understand very, very quickly why the insurance company is very uneasy with covering mold. And in most cases, there are clear exclusions for it. And so in some rare instances where there is mold coverage, sometimes it's limited by $5,000 or $10,000. And you have to prove that you did everything you could to prevent the mold from getting worse, or you dried out the house as quickly as possible. And, because mold can grow in less than 48 hours. So there's only so much you can do. But in the instance of it getting really, really bad, the insurance company has grounds of excluding it and not covering it whatsoever.
And I got it. There's so many different types of molds, and you guys are right out probably the mold capital, being on the ocean down there, because moisture is what mold breeds on. Robert, can we talk about sublimit and the exclusions and how they may be used against a policyholder?
Sure, it's a great question. Sublimits are a category of coverage in a homeowner policy or even in a commercial policy where recognizing that the value may go up significantly, like jewelry, for example. There's a limit on most homeowner policies for jewelry, and the limit is mostly applicable to things like theft. There's not a lot of sublimits under a fire policy for those higher end items, but for theft there are, as well as a sublimit for guns, a sublimit for cash, and sometimes there are special limits for antiques, Persian carpets, and things that do tend to fetch a very high value, either because they're so expensive to replace or because even after 30, 40, 50 years, an antique doesn't go down in value, it goes up. So you have to look at the coverage to know what those special limits are. The additional coverage under a basic homeowner policy is a sublimit of sorts too. We didn't cover it in our explanation, but the extensions of coverage for debris removal, that's a sublimit in a policy too. But you have to go to the fine print to find it. The policies change all the time, and so do the regulations governing fair claims practices. I mean, we happen to live in a very consumer-friendly state, so fortunately, because most of the people in California who can still afford to live in California want to be able to they want to be able to get insurance and to make it work for them. The last 3 years has seen a number of insurance companies leave. I find myself agreeing with people who ask me whether they should even file a claim for $10,000 or $20,000 because they're worried about getting dropped. I basically, I empathize with them and I say, yes, you should be concerned. What would be worse? Going out of pocket for several $1,000s or finding it impossible to even cover getting insurance with a mortgage company or with your own insurance. And so people are very nervous about it.
Hey, Robert, can you reopen a claim?
Yes, you can. But it has to be typically there are statutes of limitations.
Right.
In the FEMA event here in California, people really have 3 years to present their claims and to have them be valued and agreed to. That doesn't mean 3 years and you're up. It means 3 years to put it together and to negotiate with the insurance company. If you can't get it settled during that time, it does not mean that you lose the privilege of making claim for those monies. Some of the people may need a full 3 years just to get the insurance company to agree with their calculations. And they also have the option to rebuild elsewhere or to buy an already constructed home. So frequently we'll because we're aware of that, we'll ask the carrier if we're nervous about them trying to close the door or play hardball. We will ask in advance in writing for extensions if we think they're justified. Nothing that we do, we can put a claim together and file for a demand. You don't do it in a vacuum. You bring the insurance company along for the ride, so that they understand that you're not there's not like presto 1, 2, 3, and then you've got this very embellished claim for what someone might say is a ridiculous amount of money. That's it from an outsider's viewpoint looking in. But you have to substantiate the cost of everything that you're claiming. So someone that is insured for $1,500 a square foot, that's at the high end of valuing any kind of residential or commercial building. Insurance companies aren't accustomed to agreeing to those numbers willy-nilly. So we do a lot of heavy lifting in those instances. And that doesn't mean that they're going to agree either.
I'll give you an example of an actual client. Won't disclose the name and who the insurance company is, and so this particular client came to us, in pure desperation, which most people come and they find us out of desperation because they have no other people to turn to. They don't know what to do. The Google search said, hire a public adjuster, talk to a public adjuster. They find us. Lo and behold, we were speaking to them, and it turned out that their insurance company had closed the claim, had paid, I think it was a very gracious sum of $500 on a water damage claim.
Wow.
And I'm talking about painting the picture here. This house was recently rebuilt about 2 years ago, and the kitchen is high grade 3/4 inch tongue and groove wood flooring. Cabinetry is all dovetail cabinetry, solid wood cabinetry, and the water essentially traveled all through the underside of the floors, through the cabinets, and everything.
Oh.
And because this poor insured did not understand the responsibility that the insurance company has to him as his insurance, he designated it as a mold claim. And this particular insurance company paid the mold limit of $500 and promptly closed the claim. Thank you very much. So we came and we said, absolutely not. Reopen this claim. And right now we're at about $64,000 in claiming on
Wow.
this claim, probably going to end up in the $100,000 by the time we're done with it. But this kind of thing happens so often. So what that means is, you know, you whatever you are given, and you know, $500,000 is obviously a small sum, but what the point of what I'm saying is you don't always have to accept the first number you're offered is the point of this story. And in this particular case of this claim that we're still actively working on, you know, it's always good to consult with someone like us, because we'd be able to tell you if that's a reasonable amount of money, because there are some instances as well where the insurance company does do the right thing and we say you don't really need a public adjuster. But in most cases, they're not out to do you any favors. And if they can close the claim and have you walk away from them, they will absolutely do that.
At any point, any money that folks do accept, a lot of people will hold on to a check for, you know, for more than 6 months before they even consider depositing it, because they're afraid that by taking the money, they're precluded from asking for more. And so the first thing I tell folks, so they don't get upset, is you are never precluded to ask for more. You just accept their initial calculation without prejudice and let them know, by the way, I'm happy to accept this money. I mean, chances are it may have to go to their lender anyway, but they are going to eventually need to spend that money and to use it to pay some of the bills associated with the repair. But it is just a starting point. It is not the end game. And while people may have a right to worry about accepting money, maybe starting the clock for what the insurance company believes is the reasonable time period to start work, that's an interesting question, because do you want your client to be put in a position where they come back and they remind you of the check that they first issued 6 months ago, and they want to know why you didn't start work? Of course, we make sure we respond to the insurance company by saying, why would we even consider having the policyholder start work with only a 20th, one 20th of what it may take to actually do this job? But that's something we are following from day one. The reasonable time period to adjust a claim, the reasonable time period to present it, to negotiate it. And Joseph and I are, we are constantly supporting each other in our ability to communicate with our clients, sort of getting them to accept the fact that the insurance company is misbehaving and encouraging them to make time-sensitive decisions. And some people are just, they've got their own clock. And while we might be inheriting their headache, we're pretty good at staying ahead of the curve and telling them what the issues are. We don't make the decisions for them. So that's part of the problem with any customer service business.
Well, the most important thing is now, how do people reach you?
Well, we are available on the internet. You have our phone numbers right there. But hey, wait a second. Let me turn my phone off. We're people find us all the time. Joseph, that's a little joke for Joseph. I pick up. You'd have to ask my wife. I pick up the phone at all hours of the day and night, and one wonders, do I really love work that much? I think we both. It's an interesting business if you know what value you can bring to folks. And even when neither one of us have our hand out every time we pick up the phone. I've attempted to make experts out of many of the people that call me who need help. So we have a website.
Yeah, we got about a minute, less than a minute.
The website is below, crownadjusting.com. We have a questionnaire attached to it. Our email is pretty, apparent. Robert at crownadjusting.com, Joseph at crownadjusting.com. Our numbers are below. I think you can find us.
Just give all the people listening on iHeart and Spotify, because they can't see it, how to give them your phone number.
My number's 415-999-5519. Joseph?
My number is 925-361-2994.
And you guys are with us every month. We're so lucky to have you. We'll see you again next month.
Stephen, thank you.
Thanks so much.
I appreciate it, Stephen. Thank you very much.
I'm adjusting. And they'll be back again with us next month. That's going to do it for us today. We will have more for you next week. Have a wonderful week. Take care.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.